All right, you guys. Just gonna be going through my analysis very quickly. Going into the new week. Now, I'm only going to be focused on trading one pair as I got back to trading the 1 minute. And the reason I got back to trading the 1 minute is to allow myself a sustainable way to, you know, basically achieve or pass one of these challenge accounts. Right. So the strategy I've tested so far, in half of the amount of time that I would have for the challenge account, I get to, between half to more than half of what I would need to get in terms of the return. So like generally it's like 10% is what you see. And so that's why I got back to trading a 1 minute strategy, because it allows me to do that in a way that's going to be, I'm just following a plan, right? Like I tested it where I was just risking 1%. And so that all said, that's what we're looking at today. So, um, first and foremost, what I'm going to be looking at this idea that we broke the swing low on the weekly. Okay. So now I go down to the daily, and I want the most recent thing to be the most recent swing that we have broken on the daily to agree with the weekly, right? In terms of the most recent swing that we've broken on the weekly is a swing low. So I want the most recent swing that we've broken on the daily to also be a swing low, which is what we have right here with this second white line. Okay. Now we have this swing low here, but it hasn't been broken. And we have this candle here that could be forming a swing high, but we would either need it basically an inside day where we don't take out this high, or basically, push lower, right? And again, we just don't take out the high. The most important thing is that we don't take out that high, but regardless, it's if this is going to set up a swing high, which I feel like there's a good possibility it does, especially the way it's kind of consolidating in this area and kind of like squeezing together. It could be trying to set up a swing high to shift itself for a little bit. If it's going to do that, regardless, it has to either, again, like I said, form an inside day. So either attack the high and then not get there, or possibly even attack the high in reverse, right? So there is possibilities for, sell side trading opportunities, which is what I'm still looking for, because as my strategy talks about, like I said, the weekly most recent swing that we ran out on the weekly was a swing low, and the most recent swing that we ran out on the daily was a swing low as well. So that being said, now drop to the 1 minute. And on the 1 minute, you're going to see the EMA. You sure probably saw it on the daily, weekly as well. But you'll see the EMA, and then you'll see these lines as well in here. So red line, green, gray line, and then this green box, aqua, whatever color. This represents the Asian session. I don't trade during the Asian session because I'm asleep. And then I only trade from 7 p.m. to 1 p.m. Again, the first reason that I did this was around sustainability. Second, it was around me trading when I was the most awake and the most alert and the most up. I found that for me, that's really that 6:30 to 7 to like 8 9 period. And unfortunately I usually have to like start signing on for work at 9. But I'll have an idea of, okay, well, I wasn't able to take an opportunity, or I took an opportunity, won or lost, and there might be another opportunity if we, get past this, right? Which is where I'm going to go into next in terms of what I need to see next on the 1 minute, right? So then I'll just set alerts for those things on the 1 minute, in case I'm at work, if I'm in a meeting, there's really nothing I can do. I trade the 1 minute. So, but if not, then I could go in, place that order very quickly, because I know very quick, I have a very defined plan about what it is that I'm looking for. So I know, once we get past this alert, here's what I need to see. Okay, I see that thing, and here's where I can go place my entry, stop loss, take profit. So that being said, getting on the 1 minute, what we're going to look for after we've established that the weekly and daily agree with themselves in terms of the swing lows and possibly swing highs, if that's what we're looking at in terms of being bullish, and we drop down to the 1 minute. Again, I'm only trading at 7 p.m. So we could really just ignore a lot of this, because we still have Sunday, and then after Sunday we have the Asian session of Sunday, and then also um, yeah, the time between the London session. That's what I was trying to think of. The London session, of Monday, basically, right? And so that being said, there's gonna be a lot of price action going on that I'll likely just ignore, right? But what I want to see is, are we able to run out any of these highs? Okay. So First one being here, second one being here, third one being up here. And then, honestly, we could also run out that one. Now, what I'll do is I'll go out to the daily and I'll look at the swing high where if we push above it, we can no longer trade. And I'll make that a green line just so I know that that's there on the 1 minute and I know how close I am to that. I can see that even if we run all the way up here on the 1 minute, then we're not even close to that green line, right? So that's good to see because at least for right now, and again, there's going to be more price action to look at. So what I'm about to show you right now is likely going to change, right? But at least for right now, if we're looking at this in terms of swing points, right? And in terms of where the sessions ended up, we are in. So if I go from here, from this swing high down to this swing low, right? Basically for this entire day's session, we can see that we're at the low point of the fib, right? So I would prefer for us to be above the 50% mark, okay? It's not even a prefer. It's really like, I need it for the strategy. But it's kind of like, again, things can definitely change with the candles that we see after this. So if the candles that I see, let's say I see, the next Asian session and I pull that 50, I pull that fib on, we'll likely and can and likely will have a new 50% area or a new area that marks 50% retracement, right? So that being said, we got that 50% retracement. We know we're trading in an area where, it's kind of an asymmetric opportunity or it could be an asymmetric opportunity. The next thing that we look for is we're going to just look for a pull above a set of highs. Since we're bearish, if we're bullish, we're going to look for a pull below a set of lows. Okay. But again, since we're bearish, we're looking for a pull above a set of highs. All right. So we pull above those highs. So let's say we're at that 50% mark here and we pull above it. Well, why don't we just use swing for argument's sake? All right. Even though I know that's not how I usually do it, here is just a kind of representation of what we would do in terms of, let's say, for example, we pull up this high, right? And we're now at that 50% mark. Essentially, what I'm looking for is, and this is a concept that I did not invent, okay? It's a concept that I've heard in many different ways, but I think the best way to describe it is the way that, I most recently heard about it, is basically what's called like a break of market structure. And I learned that from this guy on YouTube. His name's Michael Huddiston. He goes by ICT on YouTube, right? Now, why did I say I've learned it in different ways? I've learned about this from another mentor that I had and essentially thinking about it in the same way, but kind of looking at it from a different, I guess you would say, viewpoint, right? And thinking more about kind of the time frames that that's happening on. But essentially, it all gets back to I'm looking for a pull below a swing low, right? So the same thing that we're looking at on the daily and the weekly, that's what I'm looking at on the 15-minute. But after we're at that 50, we've pulled back to or above that 50% fib retracement on, basically the entire session like swing. Or, after we've done that and after we pulled above a set of highs, okay? So once we have this first break, I look for us to pull back up into that break, okay? And then form a second break. And that's where I look for my entry, okay? Now you might say, well, why don't you try to get in on the first one? I could try to get in on the first one, but what I found is it's better for my psychology for me to not try to call tops and bottoms, right? Because I've just found that I'm just way more willing to accept, say, for example, I enter on the second one here, right? And I take a loss, right? So I'm likely not gonna, sorry, and not there. Enter on the second one here on this pullback, right? And I take a loss, right? Well, take a loss. I've entered below this high and this high, okay? And on top of that, because of what I do with the fib tool, I'm entering in an area where likely a lot of people are starting to look to buy or have been buying, right? At least for the short shorter term, right? And so I'm trying to sell in an area where it's kind of like I'm an innovator really in terms of taking the second entry. I'm really what's more in terms of what you can call like an early adopter of a new quote unquote trend. It might not actually be new, but like, it's new for the time being because there's people who have been buying, right? So like here on this time frame, for example, on a lower time frame, for example, as this price got above here, people started buying. Got above here, people started buying again, right? So people who sold from here, they were innovators and early adopters of this new selling trend. People who sold from up here, right? That's essentially what I'm trying to do as well, right? But it's just again, like I said, if this is wrong, like if the bet I place is wrong, it's way I don't know. I just find it way more easy to accept. Like, oh, okay, well then that just this just must not be. It's either this isn't what's ICT calls the intermediate term high, or this isn't the long term high. I was wrong about one of those two things. All right. But with me trying to kind of like quote unquote, call a top or catch a knife, with calling bottoms, right? There could be a bigger variety of things that I'm wrong about. I could be wrong about the area that I'm trying to enter in. I could be wrong about, you know, what the trend is on a higher time frame, on a lower time frame. I could be wrong about the momentum that's currently in the market because I could be thinking that this upward momentum is just to set up a sell side move, right? But with this, it's all just about these highs, right? Me entering on the second one is all just about, am I wrong about the intermediate term high? Because if, let's say, for example, because if this high is close enough to this high, then I'll just put the stop above both, right? But there are times when this high is very far away from this high. So I'll just use this high here as the stop loss. All right. So let's say I'm using this as the stop loss and take a stop out. I could just be wrong about the intermediate term high and then I get another trade set up. Like it's not that big of a deal. You know what I mean? There's certain parameters that have to be set for me to, officially have a trade set up, but I'm not going to really get into those parameters here. But that's basically all I look for, really all I'm looking for on Euro USD. So again, like I said, there needs to be a lot more price action out. I understand that, but I think it's still good to just kind of be cognizant of these areas. Because let's say I come into the market on Monday and we are way, didn't need to do that. Let's say I come into the market on Monday and over Sunday, all we've done is just try to reach for this guy down here. I have no idea if we're going to do that. All we've done is just try to reach for this guy down here. And then I come into the market and I see us pushing up here, right? Well, now, again, I might be measuring the fib tool differently. But on top of that, let's say I don't see us setting up any highs here or here or here. I know that this thing needs to get all the way back up to here or here or here, right? For me to even start looking at it. So I still want to do some forecasting, even though I know especially with me trading a 1 minute strategy, it's much more reactionary, right? It is very much more reactionary in terms of you show up, you look at what you have on the charts, when you're looking at them. And that's why I still do forecasting like an hour before I get onto the charts. So it's like at a bare minimum, I start an hour before I get on the charts because I want to be able to forecast, digest what I forecasted. And then, if I have any like qualms about it or if I'm like thinking differently about something or what have you, I can go back in and have some time to relook at stuff, but I'm trying to trust my gut more, right? But that being said, that's what I'm looking at on Euro USD. Obviously, like I said, still need a lot more candles to play out, and I'm not even going to really be looking at it until like I said at the latest 6 a.m. on Monday. So other than that, I hope you guys have a good weekend, man.